here have heard of a mutual fund or an exchange traded fund or an ETF. The purpose of those vehicles, I'll just call them, they're exchange traded funds or ETFs or mutual funds. The purpose of those vehicles, it allows you or your financial advisor or your investment professional to select thousands of companies in a single vehicle, whether you're lending the money to those companies or investing in the growth of those companies. And the financial markets, particularly in the last 5 years, the last 10 years, have driven down the cost of those vehicles to incredibly low cost compared to where they were 20, 25 years ago. So all of us can literally own every single publicly traded company in the world for, it's close to free. It's not free, but it's close to free. So the ability to invest, and this is just like a philosophy, it doesn't mean one's right or wrong. There are things coming out in AI and technology that Peter doesn't fully appreciate, but will probably make its way into the US stock market. Well, if I don't want to read up and learn about all that, I can buy a fund that either invests in the 500 biggest companies in the US, I can buy a fund that invests in all 3,814 publicly traded companies, or I can buy a fund that invests in a certain tech segment. So I can, from a menu, choose. And if you're not comfortable choosing on your own, you can find someone to help you. Similarly, you can do that in the bond world. You can buy only US government debt. You can buy debt of cities like Chicago and other cities that issue interest-free debt, tax-free debt, which means you invest in the fund for 200 different cities in the US, and it pays 3%. Well, it's not 5%, but you don't owe any income tax on the 3% you make. So there's all different flavors of funds, and it can be really important to figure out where you want to go and what your tax situation is and what your goal is, and then professionals or on your own, you can do the research and pick the funds that get you where you want